Welcome to the BF Anderson Technical Report for October the 20th. Let's get right into the charts here. I've done some work that I think is important, and it's just trying to understand trend following. Trend following is a technique, it's a tool, and over the years I've learned that following trends makes a heck of a lot more sense than trying to predict a trend, because I just don't think they're predictable. So you have to kind of look at what you have today and the information you have. So what I have here is West Texas Intermediate Crude. This is crude oil. Now, we all know that oil back in 2008 got up to about $145 a barrel, then dropped all the way down in 2009 to around $30 a barrel, recovered, moved sideways, and is back in a downtrend. So using technical analysis, trend following analysis, we're going to put a 10-month moving average and a 20-month moving average. So the 10-month is the blue line and the 20-month is the red line. When you get a cross, that's called a death cross. So we got a death cross in oil. That was when we went to our clients and said, we really think you need to move on from the oil group. It's just not looking right. Well, it just so happens that the trend has never really ever gotten back into an uptrend. In fact, it's given another death cross here in 2015, and it really hasn't recovered. Now, we've gotten a little bit of a improvement here since the beginning of the year, but this really looks like a dead commodity to me. So let's look at something along a similar line, another form of energy. This is a company called Sociedad Química y Mineral de Chile. They're based in Chile. This is a company that primarily produces lithium. Now, lithium is being referred to as the white oil. So if we go back for a minute and just kind of see what's happening with crude oil, which is a form of energy, not too good. But if you look at what we've done here, now we've done the graph a little differently here. What we've done is we've got the 10-month moving average, 20-month moving average as before, but I don't have the price of the stock on here. But the main thing to realize here, there has been a golden cross here on this lithium company in mid-16 when the bull market actually got started, and it has been a very powerful uptrend ever since. Let's look at an index or an ETF of lithium producers. This would be companies like Albemarle, FMC, SQM, even Tesla is in this index. Well, you can see, again, it gave the buy signal right around mid-16 and has been in a very powerful uptrend. So you kind of have to ask the question, what is the market telling me here? Is this the end of oil and the beginning of battery technology? That's what it's telling you. Now, just to kind of give a little bit of credibility to the 10-20 trend following tool, this is the financial sector. And what I did is I went back to 2007. You can see the death cross in 2007, and then we had the financial crisis and really bad things happened. So when you get these crosses and you get these trends, you really shouldn't ignore them. Now, here is something else I wanted to discuss, and that's the concept of technical patterns. Now, we've been talking about trends, but there's also patterns. There are patterns that tend to repeat themselves, and one of those would be a head and shoulders formation, a cup with handle, a breakup of a downtrend line. But what you have here is a head and shoulders formation, which is very bullish because the right shoulder is higher than the left shoulder. Now, here's your head. This is an inverse head and shoulder formation. So you got left shoulder, head, right shoulder is not as deep in the price chart as the left shoulder, and now we're breaking out. This is a very positive thing. Now, this is the Value Line Geometric Index, which is an equity-weighted index, really tries to show you what the average type of stock is doing. Now, one other thing we want to look at, and that's emerging markets. Now, what I've done here is I've taken an ETF of the emerging markets, EEM, versus the Standard & Poor's 500. So when the lines are going down, the S&P is doing better than the emerging markets, and when the line is turning up, it means that the emerging markets are doing better than the U.S. stocks. So what we're seeing here again is a 10-20 moving average, took the price out, but you can see that the S&P has been outperforming. U.S. stocks have been outperforming the emerging markets really since around 2011, 2012. Well, all of a sudden here, we're starting to get a divergence. We're starting to see improvement in this sector. Now, is this the reversal of a downtrend? let's take another look at another graph, which is a pattern. This is the PGJ, which is an ETF of just Chinese stocks. Now, these are all the Chinese stocks that trade ADRs here in the United States versus the S&P 500. Again, line goes down, the S&P is doing better than China. If the line goes up, China doing better than the S&P. But we're just now seeing a breakout here around April, May, June of the Chinese stocks are starting to outperform the U.S. stocks. This has been a reversal. And it's been this way for a while. So if we look at it just on a pure D moving averages, taking everything else out, you can see here that the PGJ versus the S&P has given a golden cross and is now developing a very strong uptrend. So it just looks like an early stage of something that's going on. Okay, here are the top 5. Biotech, AbbVie, not familiar with it. Got to study up on it, but these biotechnology stocks are popping up on a regular basis almost daily. So I have to relearn a new stock just about every day, which is fine. Align Technology has been on our list for quite a while. This is, again, a medical device that straightens teeth. Stock just hit an all-time new high. Look how beautiful that uptrend. That is a tractor. That is a steady tractor. Now, if we go to the next stock, which is another biotech, Alnylam, I can't even pronounce it, pharmaceuticals. These things are popping up left and right. Now, most of these stocks are dealing with cures for cancer, and it just seems like to me there's a lot going on there. We should be aware of it. NVIDIA technology. I mean, this company has got a new computer that will be an autonomous computer, a level 5 computer, and they have stated in their recent meeting in Germany that this computer is 10 times faster than its predecessor. So basically, this company continues to innovate, and the stock is on the verge of making another new high. Looks very powerful. Now, here is a Chinese software company called YY. Again, the Chinese stocks continue to outperform, and YY looks good. So if you have any questions, give me a call. Thank you very much.